Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is the 14th. One day left to supposedly they reopen New York. I can't wait. This is so crazy. Uh, New York Jets, good, good morning. Trying to get up. My second cup of coffee. I'm on my first. God bless you. Wanted to ask about price action. We'll take a look at it at the close yesterday. Quite the tug of war. All right, last 5 minutes. We'll take a look at that for you. All right. Headlines. Not much out there really. The big headline today is going to be the jobs data. No doubt about it. World's largest shipper warns of collapsing volumes. Dashes hope for V-shaped recovery. I don't know how that's a shock. I just don't. I mean, really, was this not expected? Everybody bought into this V-shaped recovery stuff. I'm not even going to get into China. They're so ridiculous. Let's go to the pre-market activity. All right, so yesterday was an interesting day. We booked. Oh, before I get into this, tonight, trading today at 6 p.m. Eastern Standard Time. So please join us on YouTube. Let's begin with the NASDAQ. Then I want to talk about the bank stocks because there's something really, really wrong with the banks. Something really, really wrong. I mean, the regional banks took it on the chin yesterday. JP Morgan, Wells Fargo, whatever you look at, I mean, they're just getting destroyed. So we'll take a look at those charts, how they closed yesterday. First up, the NASDAQ this morning. We are up about just shy of a third of a percentage point. Now, we booked some profits yesterday on actually a bank short. We were short of the banks. We're still short, but only half as much because we saw some bottoming action. And I said, you know what, let's just go to the sidelines here. So let's clean all of this up and start anew. And there we go. 4-hour chart, good. So we're coming off the lows of yesterday, but still, it appears as though we have, as NFL Jets called it, a little bit of a tug of war going on here. Here is our upper band of resistance off of the lows of yesterday, and our lower band of support. Now, we saw the same price action yesterday, right? Right here. Same exact thing. So the question that becomes, do we continue higher? Or, as we did yesterday, do we fail? It's as simple as that. The only thing I strongly suggest, because I have no idea what the Fed is going to pull next, is to if you're short, keep your stops very tight. So what I think may happen here is that we will break again on the NASDAQ, especially if we have a horrible number today on the jobs data. So at current week, concerning, to say the least. Bear with me as I complete my artwork here. Just helps me to remember where we were in the pre-markets. All right, so we're holding steady here, up about a third, just shy actually. The Russell. Thomas, good morning. Yeah, the banks were very, very weak. We'll go to those charts in a moment. Yeah, a lot of volume, a lot of concern there. Everardo, good morning. Thoughts on GE filing bankruptcy? Read it was a rumor. I hadn't heard that. Did you read that? You say you read it was a rumor. Um, I hadn't heard that. That would be a mind blower. That would be real. That would be a shocker. I mean, they're able to get money. It's out there. All right, this is the Russell. Very weak, the Russell. And we're even down in the pre-markets here by about a quarter percentage point. So again, we're seeing the same pattern. They're bidding it up in the pre-market only to dump it. One, two. Could this be the third time? They certainly put up a defense most of yesterday. Same wedge, ascending wedge formation. And there you go. I mean, how can you buy this? This is bad. Once we start to break down below, if we start to break down below 1,200 on the Russell, we have a big gap to fill. We'll come down to 1164 pretty quickly. So the Russell not looking good here. Lower highs and rallies are being faded. Let's go to the dollar. The dollar's back above 100, very strong. But really no follow through on the dollar. It just can't seem to get out of its own way. Jay Powell was out yesterday. He was talking out of both sides of his mouth yet again. I mean, I don't think he wants negative real yields ultimately. And I think that if the markets believed he was going to push for negative yields, the dollar would have dumped yesterday. Could the dollar's strength have been due to the fact that there was fear in the markets? Sure. Selling of stocks? Sure. But the dollar looking good. Let's check out gold. Gold up. Actually, it broke out yesterday. Gold is looking healthy. But again, another instance of if the Fed really wanted negative yields, would we not have seen a real breakout yesterday on gold? I still think that we have concerns about deflation here. I'm very surprised gold is not through the 2,000 mark. If it's not, then why? I think it's because you have no velocity of money. They're printing a lot of money, but that doesn't mean inflation. You have spotty inflation, no doubt, but you need velocity of money. You need exchanges being made to generate money, and it's just simply not there. So gold is looking strong. It had broken out yesterday, pulled back, retested, follow through, consolidation. So there's a good chance we move up higher here. So gold looking pretty good, but no big breakout yet. Now I'm talking on a daily basis, not a 4-hour basis. Nat gas, horrible day yesterday. Now we did get a rebound late in the day, slightly off the lows. And we were looking at UGAZ and never hit our price target. I never got the alert. But it looks as though this morning we're going to probably pull back on nat gas. Here was yesterday's rebound, popped. Now we are stalling out, no great shock. So what I want to do is set an alert. I just want to know here when and if, or if and when, we break to new lows on the day. Because I do think there's a trade to be had here on nat gas, albeit very, very short term. I mean, you take a look at the weekly chart of nat gas, and it is a nightmare, a real nightmare. RSI looking like we're going to pop here. And we're lifting off the lows on RSI. All right, so we're eyeballing nat gas. Let's just bring up UGAZ for a moment. I'll show you what I mean. All right, so here's UGAZ. This is the leveraged ETF, putting you long of nat gas. And you can see I have an alert already set here. It never fired off yesterday because we came just shy of it. I set it at $15, not $15 per share. Oh yeah, it is $15 per share. I wanted to see an overshoot to the downside. I didn't want to buy it right at 15. I think they're probably going to overshoot to the downside, but I do want to see a close above it before we execute. If it closes down below $15 per share, I'm not interested until we rebound, because that is a support level. All right, so looking very, very similar to the chart of nat gas. We are off the lows of the close yesterday. I'm not ready to pull the trigger here. I want to see more weakness. I want to see a little bit more fear in nat gas. Now, if you take a look at, excuse me, at Nat Gas on a, go to UGAZ. Do, 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 do. It's a pretty scary chart. Look at this break on a weekly basis. I mean, wow. Pretty scary stuff. We'll see how we close out the day today. But Nat Gas has its issues here, no doubt about it. And I'm worried about what happened on the USO, with the USO a couple of weeks ago, potentially occurring with Nat Gas. You can see on a 30-minute chart, we rallied off the lows yesterday, even broke out, retesting now. We'll see how we open up. Back to the futures. Bob, your thoughts on home builders as we may see large city populace leaving the states, such as Florida and Texas? I'm not loving the home builders here. I have a lot of concerns about people's ability to purchase homes. To be honest with you, I'm very, very worried. We'll take a look at the HGX, the home building index. You know, I know they were stronger. The last time I looked, I think it was last week, I looked at the home building index and it looked pretty strong. But so did the rest of the market, and I wasn't buying into that rally either. You know, in fact, we were shorting it. So I'm fairly confident that we're probably seeing a pullback at current on the home builders. Yeah, ultimately, will LA, will New York, will other metro areas see an exodus? Yeah, I believe that for quite some time due to the fact that the tax laws have changed so dramatically, and you have that crazy lunatic Pelosi out there. I mean, if you take a look at her $3 trillion, quote unquote, air quotes, stimulus bill, I mean, it's just a hodgepodge of social welfare lunacy. I mean, it's just crazy. But I'll leave everybody to do their own research on that. But you know, from my perspective, just a complete and utter insanity what she's doing. In fact, let's go to the home building index. Now you have me curious. Yeah, we're coming off here. We'll go to a weekly chart first. So we did have a nice rally. You know that everybody was betting on a V-shaped recovery. I never bought into it. I don't think this unemployment issue is going away anytime soon, and I feel horrible saying that. And these lunatics are going to hyper overregulate everything. They can't help themselves. And they're going to say it's for the benefit of us. And all it is just their hyper need to regulate and be all powerful, these politicians. So I think that ultimately we're going to break here and head down to. I'll hold off on saying lower lows, but in all probability, we will. But it's surprising how strong we rallied back here on the home builders. You can see the Stokes are beginning to roll over. RSI rolling over here. Drilling down to a daily chart. Lower highs on Stokes. Lower lows now beginning. We're back down below the 50-day moving average. Lower highs there. I don't see any reason to be long of the home builders at current. I'm always open-minded about trades, and if something happens that could change my mind, I'll certainly listen to it. But at current, I'm not seeing the trade here that that's a good risk-reward entry point. So I would avoid these names. Let's take a look at the bank stocks. Begin with simple as this is a leveraged ETF. So keep that in mind when you see the percentages pop up. This is the regional bank index. Thomas, I went long IWM XLF, 10% drawdown on 2 days. I'm beating up lagging sectors. Was too much of a deal to pass up. I think what you need to do, Thomas, is, first of all, let me say this before I pontificate. Listen, we all make bad trades. If we don't say that, then we're all just a bunch of BS artists, right? So that being said, before I talk about your trade, I just want to fess up that we all make bad trades. So let's get that out of the way. So the question is, in hindsight, what was 10% drawdown is a big drawdown. That's a big drawdown. So the question is, why did you enter the trade, and what was the strategy for exiting the trade prior to moving into it? And if you can answer those questions, then you're all good to go for the next trade. The IWM was definitely giving signals that in the pre-market, I believe on, what was it? Was it Monday? I think it was Tuesday. That it wanted to try to rally, and ultimately it did not in the morning. In the pre-market, it was attempting to rally. It never opened up strong. In fact, it never even made a new daily high. So they were going to try to do what they did a few weeks ago. But we did trade the IWM on that pop-up a couple of weeks ago, and we got out very quickly, couple-of-day trade. I thought that they were going to try to do the same thing a couple of days ago. So I don't blame you for thinking the IWM would rally. The banks I was more concerned about, because last week XLF was sending us signals that, things are getting ugly out there. And we'll first take a look at the regional banks, and we'll talk about why. The regional banks, wow. They're down. Keep in mind, again, this is a regional bank ETF. So $38, let's just round this down here, divided by 3. All right, so about 13% down, whether this a one-time ETF. Look at this breakdown on the regional banks. The problem with the regional banks, and this really goes back to the question of, do you want to buy home builders, right? If the regional banks are breaking down as they are right now, that's their bread and butter. The home buyer, they don't trade stocks like your money center banks. They make loans the old-fashioned way. And if you have yields which are flashing negative signals going out to November, December, how are these banks going to make any money whatsoever in this market? It's impossible. Their net interest margin, their NIM, is nada. They're making it off of fees. So the regional banks breaking down very, very hard this week. And I don't think, in fact, I know, This ETF has never seen down volume this big. So beware the banks here. And if you want to take a look at JP Morgan, let's go to my other chart. We'll take a look at Wells Fargo. Here's JP Morgan. Look at this weekly chart of JP Morgan. I mean, wow. Huge weekly breakdown. And it looks as though we are going to challenge the lows of March. This is bad. And Neil Kashkari, who's out of the Federal Reserve in Minneapolis, said weeks ago, and I even said this when he said it, I said, Neil Kashkari, when he speaks, you need to listen because sometimes he gets a little bit nutty with his comments, but he speaks unfiltered. And he said these banks need to raise capital. And one of the reasons why I said the banks need to come down a bit ultimately is because he said they need to raise capital. And I thought that they would rally the banks, providing them an opportunity to raise capital, but they never did. And now they're breaking down. So Neil Kashkari, he came out and said it in no uncertain terms, just by his comments. He didn't say that the banks were going to drop. He said they need to raise capital. And that was an indicator that in all probability these banks are going to pull back. Look at this volume. And worse than JP Morgan is Wells. Do I have a chart of Wells up here? Yeah, I do. They were signaling last week that they were breaking down. Look at this week. They're probably going into the teens on volume. Scary stuff. Here's a monthly chart. Where do we think we're going here? I mean, we're becoming a little bit oversold. I'm automatically thinking about a trade. Yeah, I think we're coming down here. Ultimately, we'll probably get a healthy bounce with probably a 16 handle. That's pretty scary stuff. So let's annotate this. This is probably where we're going. And any trade to the long side would be very, very short-lived. So these banks do need to raise capital. I mean, you only had most of the S&P 500 companies last quarter reported poor earnings due to the impact of the pandemic that really only impacted their earnings for about 2.5 weeks. Now you have a full quarter of damage to these stocks. What are they going to do next quarter? They're going to have to raise capital. HSBC lost $200 million. Well, HSBC has, I did a video about HSBC a while ago, and this is before the pandemic, and I thought that HSBC would drop. In fact, let's bring them up because they derive I believe they're Hong Kong based. They derive most of their earnings out of Hong Kong and mainland China. I don't have a chart up here. That's surprising. And I figured that they would drop. Wow, yeah. I'm surprised I don't have a chart up here. I must have deleted it. All right, so yeah, HSBC is. I don't think it's investable. I think that they're in a lot of trouble. This bank. And with the screws being tightened on China now, I don't get the warm and fuzzies about HSBC. Yeah, we're rolling over here. Look at this. Oh my God. We're gonna break. This is a short all day long. So all I'm doing here is I'm looking for a break of the support level. And HSBC goes a lot lower. I think that you may even have ongoing concern issues here. Hong Kong is not the crown jewel of the realm anymore. So I don't see an investment here. I see nothing but problems for HSBC. You know, it's a sloppy setup here with my annotations, but I think you get the picture that were I an investor in HSBC, I'd be very, very worried here. All right, moving on. Hey, Tommy, good morning to you. Hi, Bob. As I'm expected, that 4-hour candles are indicated sell-off beginning. Do you hear Trump? Pull equities? Yes, I did. He's got those are pension fund dollars as well. And it's about time. It's about time. I think China will take same two and make it stock. More wars down. The Chinese need. They'll probably take some sort of retaliatory action. I mean, what you're seeing right now is their President Xi trying to save face around the globe. His position is weak and getting weaker. So he's becoming very, very desperate, and desperate people take desperate measures. So I'm not going to be the least bit surprised at some point in time. And we're short China. We added more to the short this week. I think that ultimately, you know, when you have situations like we find ourselves in right now, where you have thugs, and he's a thug. Let's face it, he's a dictator. He's a thug, backed into a corner. They take extreme measures to retain power. And I'm not going to be the arrogance that we're seeing, forcing. I think it was, I believe it was Poland. They offered to donate, in air quotes, donate medical supplies, but only if the Polish president, made a phone call to President Xi, thanking him for those medical supplies and making it public, and making public statements, making the Chinese look good. And they unleashed this virus on the globe. So the Chinese are very desperate, and ultimately, this is going to become kinetic somewhere, somehow. I was watching Australian TV. The Aussies, the New Zealanders are really ticked off, and there's a lot of friction between those folks and the Chinese. So this is only going to get worse. This is going to get worse before it gets better. I'm fairly confident. As a matter of fact, so confident of it, I put my money where my mouth is. Uh, yes, inferior medical supplies, no doubt. They sent medical supplies over to Italy, and the Italians told them to send it back. Take it back. All right. What else do we have here? Let's see what J.P. Morgan's doing in the pre-market. Another new daily low. Big shock. Okay. All right, I know I had a request here, AUMN. Let's go to that. Bring up TrendSpider. All right, AUMN. So I'm gonna just go high level here. Um, Yesterday we booked profits on our gold mining position, and we actually went short, and I'm kind of regretting it at current because the bounce back that we saw late in the day. So I'm not looking to do any averaging down, any of that nonsense. So we may have to close out that trade, and we'll see how we close out the day, but open up a new trade here on the miners. But speaking to AUMN, I mean, it broke out on a daily basis. Popped up here on the 12th. Yesterday did a retest, rallied into the close. You see these volume bars here? This is why you're getting a big tug of war. A lot of people struggling with this stock at this price point. But once you get through 24 cents per share thereabouts, the resistance begins to diminish quite a bit. And the path higher should be a bit easier because you don't have as many sellers above. Four-hour chart. It's looking good. It's just consolidating right now. Two-hour chart. Very tight Bollingers. I think you can get a pop-up higher here. Again, what is what the magic number is probably 24 cents per share. And once you get through that level, you'll come up here to 26 cents. I'm not a big penny stock trader, so it's just even odd even saying these numbers. We're probably coming up to 25, 26 cents per share pretty quickly. And in percentage terms, it's a pretty big number from where we are right now. So I think you're in a good spot here if you're long. If you're not long, I'd just wait for a breakout above In fact, you'd be fine with even purchasing it right now. You've already broken out. You've already retested. So I'd be fine with picking up some shares here right now. That's my take. Barrick is working with them. Okay. Yeah, I think you mentioned that a couple of weeks ago. And Barrick's a very, very good company. Very, very good company. Them and Newmont Mines. All right, with that, folks, I'm going to say everybody have a great trading day, a profitable one. And please slam that like button if you would. And I will talk to you soon. Take care.